Hello friends, welcome you to your own YouTube channel. In this video we will discuss about Economic Survey 2022 to 2023 highlights. Union Minister for Finance and Corporate Affairs, Nirmala Sitharaman, presented the Economic Survey 2022 to 2023 in the Union Parliament. The highlights of the survey are as follows. State of the Economy 2022 to 2023. India's medium-term growth outlook, fiscal developments, monetary management and financial intermediation, prices and inflation, social infrastructure and employment, climate change and environment, agriculture and food management, industry sector, services sector, external sector. State of the Economy 2022 to 2023. Recovering from pandemic-induced contraction, Russian-Ukraine conflict and inflation, Indian economy is staging a broad-based recovery across sectors, positioning to ascend to the pre-pandemic growth path in financial year 2023. Private consumption in H1 is highest since financial year 2015, and this has led to a boost to production activity resulting in enhanced capacity utilization across sectors. The capital expenditure of central government and crowding in the private capex led by strengthening of the balance sheets of the corporates is one of the growth driver of the Indian economy in the current year. Retail inflation is back within RBI's target range in November 2022. Indian rupee performed well compared to other emerging market economies in April DEC 2022. Direct tax collections for the period April to November 2022 remain buoyant. India's GDP growth is expected to remain robust in financial year 2024. GDP forecast for financial year 2024 to be in the range of 6 to 6.8%. Enhanced employment generation seen in the declining urban unemployment rate and in the faster net registration in Employee Provident Fund. Economic growth to be boosted from the expansion of public digital platforms and measures to boost manufacturing output. India's medium-term growth outlook. Indian economy underwent wide-ranging structural and governance reforms that strengthened the economy's fundamentals by enhancing its overall efficiency during 2014 to 2022. With an underlying emphasis on improving the ease of living and doing business, the reforms after 2014 were based on the broad principles of creating public goods, adopting trust-based governance, co-partnering with the private sector for development, and improving agricultural productivity. The period of 2014 to 2022 also witnessed balance sheet stress caused by the credit boom in the previous years and one-off global shocks that adversely impacted the key macroeconomic variables such as credit growth, capital formation, and hence economic growth during this period. Fiscal developments. The Union government finances have shown a resilient performance during the financial year 2023, facilitated by the recovery in economic activity, buoyancy in revenues from direct taxes and GST, and realistic assumptions in the budget. The gross tax revenue registered a YoY growth of 15.5% from April to November 2022, driven by robust growth in the direct taxes and goods and services tax, GST. GST has stabilized as a vital revenue source for central and state governments, with the gross GST collections increasing at 24.8% on YoY basis from April to December 2022. Union government's emphasis on capital expenditure has continued despite higher revenue expenditure requirements during the year. The centre's capex has steadily increased from a long-term average of 1.7% of GDP to 2.5% of GDP in financial year 2022. The government's capex-led growth strategy will enable India to keep the growth interest rate differential positive, leading to a sustainable debt to GDP in the medium run. Monetary management and financial intermediation. The RBI initiated its monetary tightening cycle in April 2022 and has since raised the repo rate by 225 bps, leading to moderation of surplus liquidity conditions. Cleaner balance sheets led to enhanced lending by financial institutions. The growth in credit offtake is expected to sustain, and combined with a pickup in private capex, will usher in a virtuous investment cycle. Non-food credit offtake by scheduled commercial banks has been growing in double digits since April 2022. Credit disbursed by non-banking financial companies, NBFCs, has also been on the rise. The gross non-performing assets, GNPA, ratio of SCBs has fallen to a 7-year low of 5.0. The capital to risk weighted assets ratio, CRAR, remains healthy at 16.0. The recovery rate for the SCBs through insolvency and bankruptcy, IBC, was highest in financial year 2022 compared to other channels. Prices and inflation. While the year 2022 witnessed a return of high inflation in the advanced world after 3 to 4 decades, India caps the rise in prices. While India's retail inflation rate peaked at 7.8% in April 2022, above the RBI's upper tolerance limit of 6%, the overshoot of inflation above the upper end of the target range in India was, however, one of the lowest in the world. The government adopted a multi-pronged approach to tame the increase in price levels. Phase-wise reduction in export duty of petrol and diesel. Import duty on major inputs were brought to zero while tax on export of iron ores and concentrates increased from 30 to 50%. Waived customs duty on cotton imports 14th April 2022 until 30th September 2022. The RBI's anchoring of inflationary expectations through forward guidance and responsive monetary policy has helped guide the trajectory of inflation in the country. Social infrastructure and employment. Social sector witnessed significant increase in government spending. Central and state governments' budgeted expenditure on health sector touched 2.1% of GDP in financial year 2023 and 2.2% in financial year 2022 against 1.6% in financial year 2021. Social sector expenditure increases to 21.3 lakh rupees crore in financial year 2023 from 9.1 lakh rupees crore in financial year 2016. Survey highlights the findings of the 2022 report of the UNDP on Multidimensional Poverty Index, which says that 41.5 crore people exit poverty in India between 2005 to 2006 and 2019 to 2020. The Aspirational Districts program has emerged as a template for good governance, especially in remote and difficult areas. eShram portal developed for creating a national database of unorganized workers, which is verified with Aadhaar. As on 31st December 2022, a total of over 28.5 crore unorganized workers have been registered on eShram portal. JAM, Jan Dhan, Aadhaar, and Mobile, Trinity, combined with the power of DBT, has brought the marginalized sections of society into the formal financial system, revolutionizing the path of transparent and accountable governance by empowering the people. Climate change and environment. India declared the net zero pledge to achieve net zero emissions goal by 2070. India achieved its target of 40% installed electric capacity from non-fossil fuels ahead of 2030. The likely installed capacity from non-fossil fuels to be more than 500 gigawatts by 2030, resulting in decline of average emission rate by around 29% by 2029-2030 compared to 2014 to 2015. India to reduce emissions intensity of its GDP by 45% by 2030 from 2005 levels. About 50% cumulative electric power installed capacity to come from non-fossil fuel-based energy resources by 2030. A mass movement lifestyle for environment launched. Sovereign Green Bond Framework issued in November 2022. RBI auctions to tranches of 4,000 crore rupees sovereign green bonds. National Green Hydrogen Mission to enable India to be energy independent by 2047. Green hydrogen production capacity of at least 5 million metric ton per annum to be developed by 2030. Cumulative reduction in fossil fuel imports over 1 lakh rupees crore and creation of over 6 lakh jobs by 2030 under the National Green Hydrogen Mission. Renewable energy capacity addition of about 125 gigawatts and abatement of nearly 50 MMT of annual GHG emissions by 2030. Agriculture and food management. The performance of the agriculture and allied sector has been buoyant over the past several years, much of which is on account of the measures taken by the government to augment crop and livestock productivity, ensure certainty of returns to the farmers through price support, promote crop diversification, improve market infrastructure through the impetus provided for the setting up of farmer-producer organizations and promotion of investment in infrastructure facilities through the Agriculture Infrastructure Fund. Private investment in agriculture increases to 9.3% in 2020 to 2021. MSP for all mandated crops fixed at 1.5 times of all India weighted average cost of production since 2018. Free food grains to about 81.4 crore beneficiaries under the National Food Security Act for 1 year from 1st January 2023. Online, competitive, transparent bidding system with 1.74 crore farmers and 2.39 lakh traders put in place under the National Agriculture Market Scheme. Organic farming being promoted through farmer-producer organizations under the Paramparagat Krishi Vikas Yojana. India stands at the forefront to promote millets through the International Year of Millets initiative. Industry sector. Overall gross value added by the industrial sector rose 3.7%, which is higher than the average growth of 2.8% achieved in the first half of the last decade. Robust growth in private final consumption expenditure, export stimulus during the first half of the year, increase in investment demand triggered by enhanced public capex, and strengthened bank and corporate balance sheets have provided a demand stimulus to industrial growth. PMI manufacturing has remained in the expansion zone for 18 months since July 2021, and index of industrial production grows at a healthy pace. Credit to micro, small and medium enterprises has grown by an average of around 30% since January 2022, and credit to large industry has been showing double-digit growth since October 2022. Electronics exports rise nearly threefold, from $4.4 billion in financial year 2019 to $11.6 billion in financial year 2022. India has become the second largest mobile phone manufacturer globally, with the production of handsets going up from 6 crore units in financial year 2015 to 29 crore units in financial year 2021. Foreign direct investment, FDI, flows into the pharma industry has risen 4 times, from $180 million in financial year 2019 to $699 million in financial year 2022. Services sector. The services sector is expected to grow at 9.1% in financial year 2023, as against 8.4% in financial year 2022. Robust expansion in PMI services, indicative of service sector activity, observed since July 2022. India was among the top 10 services exporting countries in 2021, with its share in world commercial services exports increasing from 3% in 2015 to 4% in 2021. India's services exports remained resilient during the COVID-19 pandemic and amid geopolitical uncertainties driven by higher demand for digital support, cloud services, and infrastructure modernization. Credit to services sector has grown by over 16% since July 2022. $7.1 billion FDI equity inflows in services sector in financial year 2022. Contact-intensive services are set to reclaim pre-pandemic level growth rates in financial year 2023. Sustained growth in the real estate sector is taking housing sales to pre-pandemic levels, with a 50% rise between 2021 and 2022. Hotel occupancy rate has improved from 30 to 32% in April 2021 to 68 to 70% in November 2022. India's e-commerce market is projected to grow at 18% annually through 2025. External sector. Merchandise exports were $332.8 billion for April to December 2022. India diversified its markets and increased its exports to Brazil, South Africa and Saudi Arabia. To increase its market size and ensure better penetration, in 2022, CEPA with UAE and ECTA with Australia come into force. India is the largest recipient of remittances in the world, receiving $100 billion in 2022. Remittances are the second largest major source of external financing after service export. As of December 2022, Forex reserves stood at $563 billion covering 9.3 months of imports. As of end November 2022, India is the sixth largest foreign exchange reserves holder in the world. The current stock of external debt is well shielded by the comfortable level of foreign exchange reserves. India has relatively low levels of total debt as a percentage of gross national income and short-term debt as a percentage of total debt.